All right, everyone, welcome back for another episode of Carnivore Trades. Today is Thursday, June 16th, 2022. If you like the content, give the video a thumbs up, subscribe to the channel, etc. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, here, so markets are zooming again to the downside. So any thought of a possible island reversal we talked about yesterday. If we look over here on the daily time frame, we had this little potential island gap here. We said, with OPEX week being a thing, it's possible that we could, gamma squeeze up if we got continuation. Obviously, that didn't happen, and we're selling again. S&P down just under 3.5%. Triple Qs here down 4% here on the day. It looks like the Qs on the daily time frame. Want to go down and tag this trend line? You could basically say we kissed it there. Maybe we have a little bit of algo buying now from that. As you can see, market starting to just creep up off of the lows. Bottom line here to me, though, is that there's not enough volatility right now. There's a lot of volatility in price, but the volatility index, rather, not really showing a whole lot. It still hasn't been able to take out the local highs, let alone the 52-week highs. And until that happens, I don't think we're going to get any sort of significant type of a rally. And we kind of talked about this, last week, or maybe it was earlier this week a little bit. We said, going into the FOMC, maybe we can get some type of a bounce and then a sell off of that. That's one of the scenarios we talked about. The difference is, we're getting that setup play out here, but I thought the VIX would really start to spike. And after that movement on Monday, we were saying like, hey, look, the VIX is actually kind of behaving like it's supposed to here. We may be finally starting to see fear creep into the market, which is what we need for the market to be able to rally at any sort of significant amount, rather than just like a one-day rally or something like we've been getting. But we're not seeing that yet. It still could happen. If we take out this high, we could easily take it out tomorrow. Then perhaps we could get that going, and we could get that the bottom that I said that we'd probably bottom by next week. And that's certainly, on the table if that happens. But so far, the action today has been really kind of pedestrian. All the selling, like I was saying earlier this week, all the selling's being done overnight. So all of this, it felt like the market was trying really hard to sell off here. And from really the first opening candle to here, we're only down like a dollar or two on the spider. So it's not like we're gapping down and then flushing another 5, 6, 7 points. It's really it's been kind of pedestrian here. Well, I guess you could say we had a 5-point flush, but it's not like a 1,000-point SPX flush or anything crazy. There's no real panic yet, and until that happens, I don't think we're really going to bottom here. But we could be close to that. Maybe we get that tomorrow. The VIX is pretty close to the highs of Monday. If that gets taken out, if 36 gets taken out, we'll probably start to see that next week. At least that is what I would assume the likely scenario would be. We've had a lot of surprises so far this year, so we'll see what we get. But again, like I've been saying quite a bit lately, and just urge caution. Don't jump out in front of a freight train right now. Don't jump out and try to overload yourself into too many positions here. We did break this little trend line here on the spiders. Now it is an OPEX week, so it wouldn't surprise me if we gapped up tomorrow and closed at 380. So that's possible. We can, a lot of time when you have these downsloping trend lines here with lower lows and divergent lows at that, a lot of the time the first hit is a fake break. So, it's possible that could happen. I'm not sure of the chances of that, but, that is a possibility. And then, really downside targets are the same here. You got this previous all-time high here on the SPY, 360 handle, and then after that you got that 200-week moving average, which would be pretty good support. It also coincides, if you take a trend line here, there's like a gap that never got filled on the weekly, coincides with that. And then if you got through that, previous all-time high at 340. So there's a lot of support in this area here if we were to flush down on fear or something of that nature. But ultimately, I don't necessarily think the downside's that much higher right now. I'm likely to think it's more closer to 350 or 355, somewhere in that area, at least for now. And then I think we get some type of a summer rally here. The triple Qs, you're very, a lot much closer here to that 200-week moving average already. And then there's that 260 handle. And then through that, you got that little chop of an area and then a gap fill at 252. So those are possible downside targets as well on the triple Qs. But again, you're into this, you're getting very close to a good support zone. But I'd like to see volatility spike before I say anything, about any sort of sustained bottom here. So that's really the kind of setup moving forward. Now, there's a few other areas and sectors that are performing a little bit better. So we've been saying this a lot lately, but IGV just barely took out the lows of the year today. Whereas, again, the spiders here have taken those out a long time ago. So there's some weird, some of these tech areas that are so beaten up. ARC still hasn't taken out 52-week lows yet. So some of these stocks, and I've been telling you guys this for a while, like some of these really beaten down stocks, they've already been beaten down so much that it's like anybody who wanted to sell is already sold. So we're getting kind of to this situation where some of these plays are actually outperforming a little bit. XBI, this has been absolutely crushed here. If we look on the weekly, into that double bottom there from 2020, got a little bit of bounce, now testing it again, but still not through the lows. So again, we're starting to see kind of a change in dynamics. Some of these stocks that have been leading to the downside are now kind of leading performance-wise not to the downside, but they're not down as much as, big tech. It's now big tech's turn to sell off. Speaking of turn to sell off, what I've been telling you guys for a while now, XLE here, wiped out basically a month worth of gains in, the last week. So big sell-off on XLE, down 6%. Chevron down 5.75. Told you guys that did technical damage yesterday. Exxon here into that 50 moving average. So maybe that gets a bounce here tomorrow. Nice little pivot high, 50 moving average. Could be a good area, but energy, again, not a good idea to chase anything, and not a good idea to chase energy. So now it's energy's turn to sell off. And I told you guys, as soon as the selling really intensifies, none of these things will matter. I don't care how great the fundamentals are. In the short term, the market mechanics will overtake the fundamentals. And so, you'll get a chance to buy energy again. I promise you. Don't chase it though. But anyways, here, getting back to it, semis. So breaking through this yellow trend line and now back down to that 200 handle. So this has good support in this area. We talked about this earlier this week. This is a good level here. Doesn't mean it can't get through that a little bit. I think there's also a fib here. I want to say a 50% retrace. Let's just double check that. Yeah, so you just, testing that 50% fib there on the semis. If it gets through that, the 618 would be a home run area. Previous all-time high, this chop breakout bar. So that would be your home run area if we really flushed lower. But semis breaking through that trend line, so we'll see what we get tomorrow. Again, this is another reason why I don't see there being too much more downside in the near term, outside of if we have some type of a crash scenario, which could happen. But there's a lot of things that are very close to pretty major support, and that's really the only way I can put it. You're looking at the Dow Transports here. Again, same thing. 200-week moving average. You got this big consolidation area of support. This previous high here kind of coincides with that 200. So I mean, there's decent downside here, but it's not like 20, 30, 40% downside. Nothing crazy. Again, outside, barring really a crash scenario. So some of these charts getting into some levels here. And we'll see what we get tomorrow with it being a quad witching OPEX. In any case, for yields, TNX so starting to come back in, so down 2.6. That's after a 50 or a 75 basis point hike yesterday from the Fed. And that's with the market down big today. So TLT coming way off the lows here. So bonds starting to get a bid, and we may start to see the dynamic change. I know that there's already a little bit of whispering about the bond market trying to price in rate cuts now, which you can't even make that up, but that is what it is. But it also could be a changing of dynamic here. TLT now turning positive on the day. You could make the case that, again, we talked about consumer discretionary goods. you know, disinflation in those names, but inflation in food and energy could ultimately lead to contraction, recession, and so on, which could make bonds attractive here, considering the, you know, the massive haircut they've taken. So take that for what it's worth. But nice reversal here in bond yields, 30-year down 1.5% as well. So a decent little move here. We'll see if that amounts to anything more here in the near term. Let's take a look at, before we get into fins, HYG here. Yep, so selling off, but again, another little interesting kind of divergence here. Selling off as it's not making new lows, not taking out Monday's low, even though the spiders are. So again, a little bit of a divergence here in bonds. Maybe the bond market is sniffing something out, maybe not. It could be a one-day thing, could be a one-off thing. Nobody really knows at this point. We'll have to see what we get tomorrow with options X, and then more so next week, once all that gamma and those options expire. The market will be kind of a little bit more free to move around the way that it needs to. So we'll see what we get next week. XLF here, down just like everything else, cutting through that support area. So let's take a look here on the weekly. Down 2.5% here. Yep, so right through that area. The problem is, I think I mentioned this earlier this week, you got down here and you got close to this area and then you bounced. I never like that. You know, it makes the support area a little bit weaker when you get that close to it and then you put in a lower high. So it looks like we're probably going to get a pierce of that 200-week moving average. You got a nice area of support here, a nice little consolidation. So somewhere in this area, maybe sub 30 bucks or somewhere in that range, probably be a good bounce area for XLF, you know, if we get that fear spike though. But again, like I said, you know, a lot of these sectors and areas coming into pretty good support levels. Broker dealers don't like this one nearly as much. This probably wants that 200-week moving average right now. But again, a lot of real estate on the downside for this thing if it can't find its footing sometime soon. We talked a little bit about energy already. But here's crude. So selling off, nice recovery though, basically going back to the flat line, but it did, you know, have a sharp sell off here. Basically tested this kind of pivot right in this area, almost kissed the 50 moving average. It's still in a strong uptrend here. You're above the 50, 100, and 200. So it's in, you know, it's in good shape right now, but we'll have to see if it puts in a lower high or not. If it does, then it can, you know, possibly make a run at these lower areas, maybe this blue trend line again. But overall, you know, a little bit of a fade there on crude. Nat gas started up and then faded really sharply. So again, got to $8. You had trouble with that 50 moving average yesterday, and you got to the $8 level. See pivot high right here and then pivot low. Basically tested that on the backside and that got rejected. So I don't like this trend line right now for support. I think it's down to 650 here. I think you'll get there pretty shortly on nat gas, unless you start bear flagging or something like that. But it does look like to me that nat gas wants to go lower, and I'm glad I didn't pick this trend line up. I mean, it probably could have gotten a good trade out of it, but you would have had to been in and out very quickly. Nat gas rolled right over today, pretty much from the open all the way until now. So nice little fade and rejection there. We'll see if that does head lower here. Another thing that's interesting, dollar getting hit pretty hard even with the market down, and again I think that's in relation to bond yields. So again, you know, we're hearing whispers about, you know, the market trying to price in rate cuts and so on. Well, that would make sense for the dollar there to be lower if that's the case, and then you see GLD on my screen much higher. So there's that inverse relationship. Again, dollar still strong above all four major moving averages, but it did kind of, you know, a lot of the times when you get through a double top, you'll pierce it, and then all the chasers and pikers will say, oh, it's a breakout, and then they buy, and then they get whipped down. So we'll see what we get tomorrow. We get some follow through to the downside. If you take out this pivot, then it's back, you know, that 99, 99.50 area I've been talking about is back on the table. So we'll see what we get out here, but nice little reversal there on the dollar. And then gold, of course, higher, reclaiming that 200 again. Gold's been very volatile lately, kind of uncharacteristically volatile. Usually when you have, you know, a turbulent market, gold is less volatile. Now, it's very volatile during the FOMC day, so that's not atypical, but just seeing this big pop on Friday and then the sell-off, engulfing reversal Monday, and now kind of retracing that. Just a lot of volatility in gold right now. It's done a good job reclaiming those moving averages, but you really got to get above this pivot high for me to get too excited about anything it's doing right now. But overall, nice little reversal there, up 1.81%. Silver performing a little bit better here, Again, if it gets above this breakdown bar, then I think 23 is back on the table. But a nice little reversal there for silver, and we'll see what it does tomorrow here. We'll see if it gets rejected at that high. Platinum getting a little bit of a bounce. I still think this needs to go lower. And palladium, a little bit of bounce too, but kind of, you know, another inside bar pattern here. And that trend line rejection was pretty good there on palladium, still inside of this bar, so in a weak technical position. And then copper, very volatile move here today. Basically touched double bottom. You're off the lows, but still negative. So copper in a bit of a weaker spot here. And that could be due to kind of recession-ish type fears. We've talked about that earlier this week. All right, here. So lastly, let's cover Bitcoin. And Bitcoin's, you know, still holding that bottoming tail from yesterday. I like that green reversal candle with heavy volume. I like that. I like to see that. And now it's back testing that low. So we'll see if this can hold. If it takes this level out on a closing basis, then you're going to go to 18 in the short term. And then if that doesn't hold, there's a lot of real estate on the downside, probably to, you know, about 12, 13,000. I don't necessarily think that doesn't hold right now. Again, this is just another asset that's into or very close to a major support area, you know, 20,000, 18,000. You know, like we talked about the Dow transports, semis, you know, fins, you know, a lot of support areas getting close to right now, but we need to see that vol spike, that fear spike kind of come into play, and we need to see that kind of flash crash happen, I think, personally, for the market to get any sort of significant low put in. If we do that, then we can have a nice little summer rally, and maybe things can finally quiet down a bit, and just maybe tread a little bit of calmer waters here moving forward. Anyway, check back in here. Market's closing in about 20 minutes. We're getting a little bit of a rollover here off that little algo pump. We'll see what happens tomorrow. There is a lot of option open interest at 3,400 and 3,500 on the SPX. Typically, the market makers don't want those to pay out, so there is incentive to keep the markets off the lows at least. But we'll see what we get. Anything can happen in this market. And again, we'll just keep watching volatility. We'll keep watching those indicators, and anything changes, of course, I will let you know. Anyways, guys, and wrap it up here. Come find me on carnivoretrades.com, and I will talk to you all tomorrow.